Hey everyone, happy Thursday, December 21st. It's about 9:40 a.m. on the West Coast and time for another market updates. Things have been on a good run, over the last month and a half, like we've talked about. A little bit of a slow week this week. Not a lot of data came out, but tomorrow we got the big PCE inflation report coming out. So let's get right into it. So the first thing we got this week, we got November starts and permits and completions for builders. So as I say here, single families up, but let's take a closer look. Oh, go back one. So as you can see, completions were up 5%. A single family actually were down in completions 3.2%. About a 1.45 million pace for the completions across the board, and that's including multifamily and single family. Starts, though, were up quite a bit across the board. As you can see, 14.8 overall and 18% for single family. And single family now are up 42.2% year over year. Permits, again, kind of similar story, down overall, but single family up 0.7%, and now those are up 22.8%. So, builders have obviously, switched over to a little bit more single family compared to multifamily like they were doing the last couple of years. And one thing we could keep in mind, they are, building a little bit lower cost homes. So maybe that's why they're, going away from multifamily a little bit, since they are, building some things like townhomes and things like that across the country. Next thing we got this week was November existing home sales, and those were actually surprisingly up. It was supposed to come in a little negative. It came in almost 1%, up 0.8%, still down 7.3% year over year. But that makes sense, given what's been going on with rates, not a lot of inventory out there. Obviously, with not a lot of inventory, there's not a lot to buy. So again, up 0.8% month over month, down 7.3% year over year. The median price is down to 387.6, but still up 4% year over year. And keep in mind that is due to the mix of homes. That's not depreciation. That's just basically more lower price homes are on the market and selling. Inventory is down 1.7 month over month and up just slightly, just under 1% year over year. So we need a lot more inventory. Those completions and those starts that are going on the builder side, that will help. But right now, only about 3 months supply, where normal market's 4.6. The average amount of days on market is about 25. It went up from 23. 62% sold in less than 30 days. But keep in mind all these numbers here. This is November 2023. So, people, when they're buying a home, these were people shopping in October and September. October rates were above 8. So the fact that these went up and, where these numbers are at, keep in mind that that's when rates were at their worst. And since then, we've come down quite a bit. So we could probably expect the December numbers to get a little bit better across the board, January and so forth, as, things pick up steam. Next thing we got today, initial job claims. So again, a little underestimates. About 218,000 were estimated. 205,000 new claims were filed. For me, it's hard to root for that to be higher. It would be better for the markets and better for rates, but it's the holiday season. I don't necessarily want to see this huge number of people filing for unemployment all of a sudden. But continuing claims are still about 1.865 million, which is one of the highest numbers since November 2021. So, basically people are holding on to employees as long as they can, but once people are losing their jobs, they're finding a harder time finding new jobs. And keep in mind, this would be one of the last things we see flash really high. Job openings go down first, and then there's job cuts. Unemployment, people applying for unemployment, the last thing they'll kind of pop up when we know the labor market's weakening. Next thing we got. So today, this is the big one, Q3 GDP, the final reading. So they do multiple, I think, for 3 versions of each reading. Q3 last time, it's 49%, 4.9% there. It was 5.2% previously. So they downgraded this. They basically said the economy, compared to their last look at this, it wasn't as good as they expected. So that was good for us. The stronger the economy looks, the more likely the Fed is to continue to keep rates higher for longer. The more the economy slips, the more labor starts to slip, the more likely we're going to see that rate cut from the Fed sooner. So where does that leave us? The average 30-year last year was 6.62. This month or this week, it's about 6.64. So not a huge difference. Like I said, it's been pretty level. So it's been nice to see. We haven't given up a lot of our gains. So that's always good to see. And then, like I said, tomorrow we might get some nice gains. Tomorrow on the 22nd, the last thing we're going to get going into basically Christmas will be the new PCE data for November for inflation. So we already got CPI. We know how that came in. But PCE, we're kind of expecting it. The headline last month was at 3%. The market expectations is down to 2.8%. And then the core is at 3.5%, and they're expecting to come in around 3.3, 3.4. So keep in mind, the Fed keeps saying they want to get that core to 2%. So the lower we see that, the better. And then that GDP reading, we get a kind of an early look at PCE, and that kind of came out in our favor. So, fingers crossed that number continues to come down. We see some good inflation numbers tomorrow. That will spur some more positive movement in mortgage rates. Maybe we can get down, below that 6.5 number. which would be awesome to see. And then after that, once we get in the new year, then we get the new job report, and then some more inflation. And then the Fed, their next meeting is until the end of January. So we're going to see quite a bit of data before their next meeting to kind of back up this assumption that, maybe we're going to see them start to cut. Right now, the markets are saying, I think, 15% chance they will cut at that January meeting, which would be awesome. Again, on the lower end of the odds, though. But once March comes around, that's when it starts flipping in our favor. I think about 80% chance is when they expect that first cut to happen. So fingers crossed that happens. Hopefully Santa brings us good inflation data coming up tomorrow, a little early Christmas presents. If anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope everybody, has happy holiday season, Merry Christmas, Happy Hanukkah, spend it with your family, have a great time, and hopefully mortgage rates continue to rally. Have a great day, everybody.